Hey everybody, Boris, PK Forex. Welcome to the weekly technicals for August 21st to August 25, 2017 for Euro dollar, dollar yen, and pound dollar. And the interesting thing about this week, I think, that's coming up is that it's really set itself up potentially, both technically and perhaps a little bit fundamentally, but really quite technically, as a comeback week for the dollar. Even though the dollar has just been destroyed and battered for the last month and a half, and even last week when we thought the dollar was going to come back, it made a feeble comeback and then got trounced as the end of the week came on, to only finally sort of have a tiny little rally at the end of the week. The thing about this, though, is that when you look at the technicals and you look at the overall underlying fundamental picture here, the potential for a further base in a dollar and a small stage comeback really has been set up this week. Now, we don't have a lot of data on the calendar this week. It's actually a very, very quiet calendar for the majors. Zoo survey on the European side, durable goods, existing home sales, just sort of a smattering of non-important data completely. There isn't even any serious central bank data coming up. We have, I think, let me see who's talking. Yeah, we have Kaplan talking as the only person worth talking. The thing that's interesting from the central bank point of view, of course, is that we have the Jackson Hole Symposium with both ECB and Fed there, with Mario Draghi and Janet Yellen there. But ECB has already preempted any speculation by saying that Mario Draghi is unlikely to create new policy initiatives and communicate them at the symposium. Still, almost every year, something unique and interesting happens at that Jackson Hole Symposium, because you have the world's most powerful people, in fact, in one single place communicating. So the potential for some upside moves for the dollar is still very much in place, even if they're kind of mild. The other data set that we have, aside from the very small smattering of the European and US, is the UK GDP. That literally is it. It's truly the doldrums of summer, truly very much sort of the last 2 weeks of summer when almost everybody who can gets away from the markets and relaxes. But it does set up, in these relatively quiet thin markets, the potential for a move up in a dollar. Let me show you why technically. Let's take a look at the levels. So on the euro side, we're still very much at this 119, 116 corridor, with 119 really the true resistance. Now, that's the key thing to watch for, in my opinion. If we sort of break through the 118 level and move our way through the highs, all of my thesis of a dollar comeback really fail. But if we fail again here, and this is where the technicals really give us a little bit of a clue, the potential for a move back down, just a pure profit-taking move, really very much in place. Similarly, we've held the 108.50 several times in dollar yen, and we've held the 109 quite well last couple of times. So the potential for a squeeze up here, very much in place on the other side. And cable has just been a failure to the downside continuously, and I'll show you on the technical side where it still remains to be the relative weakness trade as we go forward. So here's the euro. Now, the euro looks okay technically. You can't really make an argument that it's in a true free fall. But here's the interesting thing I think to take away from the euro. It's been effectively a failed high trade since the start of August. You see, so this is August 1. We made the highs around 1900 around August 1. Haven't come close to making those highs. Have just been kind of consolidating underneath here. Now, the fact that we held the 16 for so long is very, very bullish. But every time we're kind of making a rally, if you look at it very closely, it's still very much a lower high. And I think as long as you sort of stay below the 1860. To me, the euro is a small but intelligent short, scale up short, where you sell against this with maybe an 1850, 1900 stop if you really want to give yourself a little bit of a wide area, and assume that the profit taking and the sell-off will come. The most important thing, if you are trading on a momentum basis, is if we can break this 1680 low. A breaking of the 1680 low really puts us square up into a full-on move towards the 1600. That's really the key thing. So you could sort of anticipate the short, or you could wait for the momentum move to the downside. And if that doesn't come, then of course no harm, no foul. You're not going to be in trouble. But regardless, it just looks like we've had an exhaustion of momentum and further corrective action very much due. Now, dollar yen is a little bit clearer to me as far as a buy trade on a dollar. We filled the gap for the third time in a row. The 108 simply holding. If you look at this, we've held above the 108.50 3 times and bought it back. And at this point, The fundamental structure on the US side actually looks relatively good. The Fed is very much, I think, on path to hike rates. The market is finally coming around to the idea that the rates are going to be hiked in December. And unless we get some sort of another exogenous shock, that's always, of course, the risk to the system with the US at this point, because there's always political shock going on. But at this point, it feels like all of the political drama has finally just been wrung out of the system. And with Steve Bannon gone, it's almost like a relief rally that some sense of sanity and semblance of order may be coming back to Washington, D.C. So all of these subterranean ideas could provide us the fuel for a move back up, certainly towards the 110, possibly, I think, at this point, all the way up to the 111 level. The fact that we have a triple bottom here makes me much more confident that I'd like to take the long on dollar yen and against the 108 hold. If it gets down to 108, of course, you're clearly wrong, but it just feels like at this point, technically, we're certainly getting a signal that the market is sold out. It's really not that I'm arguing that dollar is a huge buy, but just the market is sold out, and that's what makes it an interesting buy point at this level. And cable holding this 128 level, but cable vulnerable. You know, the GDP numbers, of course, come in. That could be the trigger point to the downside if they just miss a little bit. Cable is just mired, of course, in its own Brexit woes, with nothing really going on over there. We don't have any fresh data, so it's just really going to be speculative flows, perhaps even some of the end of the month flows that could try to push it around. 28 has certainly been a strong hold, but again, just like as with euro, if this goes, then it falls. That's my argument. If euro 1650 goes, 1600 almost clearly comes into view. If 28 goes, then 27 really comes into view. You have this avalanche effect. You could wait for the momentum move. You could try to anticipate it as you go along. But either way, it looks to me certainly like to be like a possibility of a dollar rally, simply on a short covering, profit taking, whatever you want to call it, basis into a relatively slow doldrums summer week. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.